Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this, what's today, Thursday edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a couple guests for you today. First guest will be at 8:15. That's Troy Noonan. He is actually in our chat right now. He is a trader and the developer of the Counterpunch Trader. And then also at 9 o'clock, we're going to be joined by Nate Storage. He's the co-founder and CEO of Amenity Analytics. On today's show, we have to talk about that Snap IPO that starts trading today. Maybe we'll take some bets on where they open. Also have a lot of ratings, and we're going to talk about that kite offering as well. Joel, how are we doing in the S&Ps right now?
We're doing okay, only down $1.75 here. All-time high close, 93.50. The high in the pre-market, 94 even. That's our number to keep an eye on. The upside, all-time high, 24.01. Coming on the downside, no damage until we get to that pre-market low of 89.50. Crude acting like he wants to break out, but down 60 cents here. We'll talk about the crude market with Troy Noonan when he comes on later on this morning. Gold battled back yesterday, but down $9, and silver hanging out at the 1840 level. Dennis, are you as well rested as I am?
I'm well rested here now. I feel great here this morning. First day in a while here. Obviously, had a very busy couple days in New York, and then we had our American Airlines debacle on Tuesday night, so a little bit cloudy yesterday. But I'm rearing to go here today, and I'll tell you, this market here is rearing to go as well. That was the buy everything market yesterday, was it not? Like, I was looking, and I always do the risk on, risk off, and you think, okay, well, when your money's flying into risk assets, it's flying to the banks, industrial cyclicals, it's going to be coming out of some of the defensive stocks, and it did a little bit at the open, but then they started buying those stocks too, and look like a stock like Johnson & Johnson, which typically, sometimes doesn't move that much with the overall market because it's more defensive. That was up $2 yesterday too. Coca-Cola was catching a bid yesterday. Coke at one time was up over almost over 1%, which is a big move for Coke on a day, where you're not really thinking defensive stocks are going to catch a bid. I mean, there was so many stocks catching bids across the board yesterday. It was really the buy everything rally again.
Yeah, higher open, just plowed through the pre-market high. We were talking maybe be a little weakness in, your interest rate sensitive sectors, but that not being the case. Gold and silver came off their lows as well, though that rally hasn't lasted. Apple back at the, or not back at the 140 level. A lot of new all-time highs yesterday.
A ton.
Berkshire Hathaway, did you see that yesterday?
It was like $5. Like, value stocks were going. Jamie from Bright was just saying, since when does value take off like that? When everything else, growth was taking off and value was taking off too. And your best indicator of value stocks is Berkshire Hathaway. And yeah, you're right. How much was it up yesterday?
I saw it up, Berkshire Hathaway up like...
When's the last time I had to move that big?
No, not in a while. Well, you got all the assets in the portfolio moving up as well, so that raises closed right at the high, 177.41. Fuzzy's asking, what percent of Americans' wealth is rising since the election? I don't know about that, but I think I heard on the radio this morning that like $3 trillion has been added to market cap since the election. I think Trump tweeted something about that too. Boy,
Imagine being that portfolio manager that sold on the night that Trump got elected, when we were down 105 S&P handles. Imagine being that money. Even the next morning, there was still some selling pressure. We opened down like 600 or 700 Dow points that next morning. Imagine being those money managers and saying, man, we're in trouble now, and took a lot of money off the table. Those guys have been chasing the market up ever since.
The only thing, I looked at like my overall holdings and stuff, and I just, the protection was so expensive that you needed such a huge down move. It's, a lot of times, when you have an event like that, it just pays to stand pat and taking a look at it afterwards. But everyone that paid up for protection, not only did they lose on that, they missed out on the upside as well in their portfolio. So baffling market.
Yes.
Kenny, did he wear his 24,387 hat? Did he wear that to the expo the second day, or did he not have it made up yet?
I think he was joking, but he probably does have that hat.
Hey, Kenny, if
Kenny,
you're listening, Dennis and I are still waiting for our hitthebid.com t-shirts. He says
yeah, he shows up at the expo with that hitthebid.com shirt. That is awesome. Rob Fries is like, that is the best name for hitthebid.com. I love that.
Yeah, he says he has 1,000 of them in his basement. So
Send a couple of those to the D for us there, Kenny Glick, if you're listening, hitthebit.com. Just another stat here for you, just, when we get on the Kenny, and he's been one of the bulls. But look at this stat. Out of the S&P 500 yesterday, 140 of the 500 companies made new 52-week highs yesterday. 140 of them, Joel. That's a lot. So you're talking over a third of the S&P 500 made new 52-week highs yesterday, and it is diversified portfolio, obviously littered with banks. We know that, but there's everything else in there too. Apple obviously was strong, but some of the pharmaceutical companies are in there now. Amgen, like the pharmas were dead a month and a half ago, and those are starting to come up. Abbott Labs making new 52-week. You had Amgen. I'm just trying to look at other pharma. You had, your healthcare providers, and we already talked about Berkshire Hathaway. You've had Boeing. It's all different stocks. Costco. So there's a defensive stock, and it's going to report there tonight, making new 52-week highs. eBay, you've got technology companies. Facebook, obviously, it's been participating now in the rally. We know Home Depot and Lowe's. I mean, this is just the most diversified portfolio. If you're looking, for, if you're trying to make the case that it's not broad, it's just a few stocks bringing us up, that is not the case anymore. It might have started that way. It might have started with the financials a little while ago, but it has now spilled into everything, and they're buying everything yesterday. But I'll tell you one thing, while we're going on this bull train. Okay, tweet from Joe Saluzzi this morning. We love you, Joe. Been a while since we've had you on the show. We got to get you back on soon. But tweet from Joe Saluzzi this morning. He said, "Look out! The Today Show is talking about the Dow."
You can use all the contrarian indicators you want here, Dennis. But,
That's often the best one right there. When the mass media is talking about the stock market, that's sometimes
scary.
Means we're getting frothy.
I just wanted to mention Mylan Labs here. Back in August and September, you can look at the daily charts. The EpiPen controversy pounded that thing down to 33.60 in late October. And now it's like it never happened. A good earnings report, not quite back at the level. August 22nd is when the senator from Iowa, Grassley, began his inquiry. But just look at that. I mean, it was one drug of the company, a lot of controversy, a lot of negative press, and what a great buying opportunity. Nice breakout if you could be trading this thing over.
Still kicking myself that I didn't buy it down there. So, any regard here. Let's just talk Fed here for a second here too, because we had Brainerd come out there last night. Spencer, do you have exactly what he said? I think I can find it if you don't have it in front of you.
Yeah, he said interest rate is likely soon. Let me get the exact quote. He said soon. It was the exact quote.
Interest rate hike.
Yeah, assuming continued progress, it'll likely be appropriate soon to remove additional accommodation, continuing on a gradual path. There was another quote we had. No, I mean that was really it.
They're going in March.
Yep. You know what they're going to do in March, Dennis, to slow this market down?
What are they going to do?
A half.
They don't want to slow the market down, do they?
They want to cool this puppy off, man. We're 100 points above the Goldman Sachs target for the year. And then now
I didn't hear the irrational exuberance comment from Auntie Jeanette.
I think you get a half here, and then no one's gonna then you at least got 6 months of less speculation about interest rates. That's the only thing. I mean, that's the only word of caution I have out here is that Fuzzy says, yeah, I would love a half. Then you can get a 0.5% on your money markets. But I'm just throwing it out there. It's a
I
possible
don't think they're going to
scenario.
half, but I do think they're going a quarter. And because the Fed is not data dependent, they are market dependent. I will say that right now. There's a quote for you. Fed is not data dependent. They are market dependent. When the market starts going up, that's when they think they can raise interest rates. The market was falling 300 points yesterday. They wouldn't even be talking about coming out and potentially raising rates. Even though they say they don't look at the markets, they do. And here we are, big, huge up move yesterday. Everybody's buying everything. And I think they go in March too. I think they go up a quarter. And on those comments, you can see this morning it's starting to spill over a little more strength in the financials. I know we're down slightly here in the S&P, but if you're looking at what's strong, very early. It's very early here yet, but Citigroup is already trading, about 20 or 16 cents into the green here. Goldman Sachs is up almost $1 here this morning. Morgan Stanley trading up. Bank of America is trading up 0.5% already this morning. So you can see here it looks a little bit of continuation there. Bonds are getting hit. Gold is getting hit a little bit. XLU is trading in the red this morning. So you can see, those comments that Brainerd said are starting to show up in the market here this morning, although it's very early yet.
All right, we got 4 minutes and we got some earnings to cover.
We didn't get to a stock yet. Let's go jump over. Where do you want to go? We could go like the Shake Shack, baby. We could go Krogering. Where do you want to go, Spencer?
Well, I guess we should start with Shake Shack because Shake Shack just opened in Detroit.
Is it open now? It's open?
It opened. What day was it? Was it Friday? Last Friday? I think like right around the corner from us, and the line was out the door on Friday. Someone that Luke walked by. He said he walked by at 9 o'clock. Said the line just to get into the restaurant was 40 minutes. So. There you go. Shake Shack Q4 adjusted EPS 9 cents. That's in line with the estimate. Sales 73.3 versus 70.68 million dollars. So they beat on the sales number. They also raised their fiscal year sales number from 348 to 352 million. They raised that by $1 million, and they see same-store sales growth of 2 to 3%.
Well, if
The
you
Shake Shack.
if
What do
you
you got for me, Joel?
well, if you're gonna base your buy or sell recommendations on the line outside the Shake Shack here, then you're just buying this stock hand over fist. It is unbelievable. The line. I think Luke went by there and they told him it would be 45 minutes for. So if you're maybe to get some good locations here, pre-market low. That was a dipsy doodle. 32.51. We came back. Hanging out at $35, kind of settled in the middle of yesterday's range. So resistance, 36.12. That was the close from yesterday. We're trading below yesterday's low. Next support level for me, not a lot until the 34.50 area.
You've had the burger. Is it really that good?
Man, it was okay. I mean, it was free, so that made it taste better.
Yeah,
But
Joel's the only person that has ever probably worked Shake Shack after hour. They were closed, and he worked them for a free burger. Joel is good, man.
it was okay. I mean,
Where
it
was
was
that
good.
at? What airport was that at?
I was at LaGuardia, the place.
Oh, it was at LGA.
Yeah.
You
So,
couldn't work him for a beer, though.
no, but
You couldn't find a beer for us yesterday or Tuesday night, but you can work Shake Shack for a free burger.
timing's everything. But
Timing was off on that one. We got 1 minute. Okay, 1 minute before our first guest here. Let's talk Sarepta from yesterday here. So just moving away from the earnings parade for a second. We got some follow-through upgrades. Lee Rink upgrading today. Nomura also initiating an add a buy. But here was a stock, and Joel and I got this one right yesterday. Now we don't get a lot of the broken clock tells the right time twice a day. Me and Joel both told the right time on this one because we could just feel it yesterday. When it was trading down to 28.5, it didn't want to go down. It wasn't a great report. It had been down to as low as 26, I think 20 in the regular session or in the pre-market or after hours session. But you could feel it yesterday. It was just wanted to have buyers, and then obviously it did close in the green. We said, we felt like it could go green. It did, and now you're getting the follow through. Now it's trading up here again. Now again, I'm kicking myself because I didn't buy yesterday, even though I was bullish the thing. So I guess I got to start listening to myself a little bit more. But Sarepta here trading up another 4%. Give us a level SRPT.
all right. Pre-market high in Sarepta, right at $32. Nice round number there. The reason we were looking at it, kind of a Gil Morales formation here, kind of a rounding bottom, institutional order flow, perhaps buying at that level. So if we can clear that pre-market high of $32, and that was right at yesterday's high too. So I'm just going to leave it there, 32. I'm not going to call a number up above that because 33.65 was your high on Tuesday. All right. 8:15, time to bring in Troy Noonan, trader, trade coach, strategy developer And I like this name, creator of counterpunchtrader.com. We'll be right
Boom.
back with Troy.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with a new guest, Troy Noonan. He is a trader, and he created the Counterpunch Trader. We're talking with Troy from California, so he's up bright and early to be on with us this morning. Troy, how's it going?
Going great, Spencer. Good morning. Thanks for having me.
Thanks for coming on the show. So tell us a little bit about what Counterpunch Trader is and kind of how you developed it.
Yeah, sure. Well, Counterpunch Trader is an active strategy for active traders. I use it mostly for day trading, but it can be used for swing trading and longer-term position trading. It's very versatile, price action based, and you'll see in a moment when we show an example. Quite frankly, it's based on identifying when either the buyers or the sellers get tired, and then momentum shifts in our direction, and then we use price action to confirm our assumptions, basically, and it presents the trades right on the chart. Very easy and straightforward because the trades are typically just directional trades. You know when you're getting long, when you're getting short. All the targets are calculated based on the patterns that it uses. It's pretty accurate, and I've been using it for quite a while now.
So why did you create, like, what led to you creating the strategy?
About 11 years ago, I started moderating a live trade room, and it was kind of necessity being the mother of invention. I was using someone else's strategy when I started doing the trade room, and what I learned was that you could be a lot more successful if you use your own work, if you do something that you have a background in, that you believe in, that you understand on a deeper level, so to speak, and just the awesome responsibility of calling live trades for people and what that actually meant led me to developing my own ideas. And so it was a lot of chart time and market time and, having to have something I could believe in each day, right? Because trading's tough. You're looking at the edge of the chart. It's easy to see the trades that already happened. But when you have to make a trade or call trades for people based on what's coming and nobody really knows what that is, it's a precarious place to find yourself if you're not in full belief in what you're doing.
All right. So
that's what led to my, yeah.
Okay, so you like to focus on the crude oil market here, and we're going to switch to your charts here in 1 second. Tell us what we're looking at here.
Well, it's been down. I mean, you can see crude's been trading in a tight range now for quite some time. So I'll be looking to take the first trade at about 850, for example. That's when we start. So one of the things with Counterpunch is that you take these setups that it presents and you apply them to tested trade plans that you can prove have basically been profitable. And then it's just about following the rules. So it's very mechanical. So at 850, I'll be looking to take a new trade. Yesterday, and probably the chart, are you showing the chart right now? I assume you're showing the chart right now, right?
Yeah, we got the chart up right here. Right now we have the one up of the tick bar, the 377 tick bar.
Right, so that's a time frame I like to trade. I've had a lot of success with that over the years, and I'm pretty old-fashioned. If it ain't broke, don't fix it. So I just keep using it. There are other charts you can use, but what we're looking at is the crude oil inventory report yesterday. So that comes out once a week. It's one of my favorite trades of the week. Basically, I wait for it to come out, wait a couple minutes, and then I start looking for the setups. So what I marked up on that chart was the trade that we took yesterday in the live trade room, just following those rules, do it the same way, and you could see how efficient it was. It got us into the trade and basically hit the targets and went on a little further for a nice trade. You could trade it with a single position or multiple positions. So what I marked on the chart was what our typical objective is, target 2. It was only 10 cents. I mean, crude is in such a tight range, and it's really not like it used to be. You don't get the bigger moves very often. But then we pick up with the trailing stop. We can usually make up for it sometimes, like yesterday.
So are
like
you
21 cents, I think.
are you using limit orders to enter your trades, or are you using market? I mean, no, I know crude's pretty liquid, but how do you enter your trades?
Yeah, great question. Going with a bracket order. So I'm usually using a market order to get in. It depends on the platform I'm trading on, but oftentimes I'm placing my trades on the Thinkorswim active window, and they don't let you use stop limit orders. So I go in with a market order, and then I've got my targets and my stops bracketed. So if you look at the example over on the right, you'll see a data window. And what I did was I clicked on the bar with the actual trade setup. That's where the little plus sign is and the dots underneath. You could look at the data window, and it tells you where to get in, where your targets are, where your stop is, how much your risk is, how much your rewards are. So I have a template set up on the active trader window. When I click my sell order, for example, at that entry, I then slide my handles. I'll slide the stop to where it needs to go, or stops, I'll slide the targets to where they need to go. And then when the trade hits a certain level, I move my stop. I try to get to a risk-free position based on the trade management rules that we use with Counterpunch Trader. The first objective is get to a risk-free position, and then the rest is just, let it do its thing. So it takes a little getting used to. You practice, but it's really straightforward, and then we just do it the same way each and every time. So
All right.
that's what you're seeing there.
Okay, now I'm bringing a chart up here of TFH 1.7 here, 1.7 contract. It hit its minimum trade plan goals in and out in 2 minutes. Talk to us about the setup here.
Yeah, sure. Okay, so this is one of my favorite markets, actually, even more so than crude oil these days, is the Russell E-mini. I mean, it's been on fire. At least for the Counterpunch Trader, whether it's going up or down. And, of course, what was interesting was the market was all green yesterday, but the trade that made me my money was a short trade. Just missed its target barely yesterday, but it's the same principle. When the setup happens, I'm going into that trade with a market order, but it's a bracketed order. It's a template with the targets and the stop. I usually use a 20-tick target, 20-tick stop, and then based on the data in the window there on the right, I'll move those levels to where they need to go. So this one happened really quickly, and that's one of the things I love about this chart is that when the market first opens, it's very active, and the Counterpunch loves to just take advantage of those early morning moves so I can get my trading done really quickly. And to me, that's a good thing because I think the less time in front of the charts, the better. At least when I'm trading, because you can get tempted. You can get tempted to keep trading when you should be done. So part of what we do is very disciplined.
And are you using the pre-market levels here as some indicators, or are you just waiting for the open of the regular session and waiting it for to hit your entries or your indicators?
Yeah, right. With the Russell E-mini, I'm not really concerned about the pre-market, although it's been a little more active lately. With some of the other E-minis, you certainly can, obviously, with the YM and ES. And the YM's been a tough trade lately, but the even the NQ are quite a bit more active. Crude oil, of course. If I'm going to be trading the pre-market, I'm probably looking at crude oil, maybe gold futures. But with the Russell, I'm waiting for the market to open. And you'll notice I'm using a range bar. Not very familiar to a lot of traders, but it's unique because it has nothing to do with time. It has nothing to do with order flow. It just has to do with price range. And so it takes a little getting used to, because sometimes there could be a burst of energy and the market moves quickly. Other times it takes a while for that range to change and for a new bar to print. So, but I find that it works great with this strategy, because this strategy is all about one side becoming exhausted. Like you see the 3 dots on the top of the chart there, right where my short entry was, the blue and red dots.
Yep.
You see those? That's marking on the chart where the buyers are getting exhausted. And then you see the dotted line, the cyan dotted line. That is a proprietary momentum indicator that kind of delineates the balance point between buyers and sellers. So if you can imagine a crocodile pit, a big tug of war, and on one side is the buyers and on one side is the sellers, and of course that line is a moving line in the sand. Once one side gets exhausted, then we're looking for the price to move to the other side of the momentum line. As it does here, it ends up getting below it, closes below it, and then we need price action to continue to move in our favor, and that's what presents these trades. And then, of course, the measurement of the targets and the stop is all dynamic, and it self-tunes itself based on market conditions. So one trade might be larger than the other as you progress. You can see this one is pretty accurate. It just missed by, I think, 1 or 2 ticks. So that's considered hitting the target. We give it a small margin of error when it gets that close to a target.
All right.
That's pretty much how it works.
Any final tips here, for traders, whether they're following your strategies or other strategies? And also, just tell us if people are interested in this trading strategy, how they can get in touch with you.
Yeah, great. Thank you. So, final tips would be, one is you have to be really solid in your belief in what you're doing. And I don't think that's something you could talk yourself into, and we could all intellectually understand stuff, but you have to internalize it to the point where it's just like breathing. It's like riding a bike, something you never forget. You just do it by reflex. If you can get your trading to that level, I think you're in a much better position than most people. And so that discipline is a practice that we do, right? And finding belief takes work. And it comes from knowing why you're trading in the first place. So hopefully you're only trading for one reason, to make money. But what does that really mean? So I think reflecting on that's really important. As far as how to get in touch with me, I'm with a company called NetPicks. So netpicks.com is a great way to start. And if you want to learn more about the Counterpunch Trader, I've got a blog. You can check out the history of the strategy. There's over 2 years of history on there, and that's counterpunchtrader.com. And then, of course, if you want to give out my email, that would be fine as well.
All right. I'll throw that in the chat.
Yeah, great.
Cool. All right.
Happy to answer questions and love to talk about trading in general.
All right, Troy Noonan, thanks so much for hopping on today. Thanks for the look at the charts, and we will be in touch. We'll talk to you again soon.
Great, thank you so much. I enjoyed it.
All right,
have a great day.
Have a good one. Always fun to talk new strategies on the show.
Yep. And crude oil market, very disciplined in what he's looking at, sticks with his signals and his indicators. So that was great having Troy on. 8:29 here, Dennis, after talking about imbalances over the last couple days. What do we got, another few seconds here? Or are they
we got another 50 seconds. Let me just sum up Troy, though, because it was a good interview. I just sat back and listened. And sometimes I like to do that, just sit back and listen, and you can take some more in. It was 3 major points that I thought that I really took, not just obviously his product, but, just talking, about trading in general. And, one thing he was talking about was have belief in what you do. So what he's talking about is confidence. And I will tell you that is the number one thing, when a trader loses his confidence, it's difficult to get it back. When you're rolling though, and when you're confident, you're not hesitating. And when you hesitate in this game, you don't make money, or you lose money, because the slower trader usually is the last one to the trade. So having confidence in what you do, belief in what you do, absolutely critical. Completely agree with Troy on that. Second thing he talked about was discipline. Moving his stops up, talking about trying to get to a trade where he's now playing with the house's money. So discipline, the other thing. And then the third thing, which is a big thing, is not over trading. He said, I sit in front of there long enough, you can catch yourself over trading. If you're doing that, that's obviously going to eat you up, not only from commissions, but it's difficult. You start trading in a shorter time frame when you start over trading. We've talked about competing with high frequency traders before. I like compete against the best machines in the world. That's why I've extended my time frame. I'm not a scalper anymore. So over trading can really get you as well. So great points, Troy. Great interview. Really enjoyed it.
All right. Did you get those imbalances yet?
Joel says, give me that imbalance data. I need to know what's going on
so
here.
Demanding.
So bringing it up here right now. I should have brought it up, I guess, while I was talking, but I'm not a good multitasker here. So, okay, here comes the imbalance data for you. And it's not coming up for me. Yeah, there it is. Bank of America, 353,000 shares to buy. Not surprising. We're seeing buy imbalances in the banks. We already talked about this morning, that the banks were looking stronger as early as when we started the show at 8 o'clock. They were starting to look stronger at 7 o'clock with the comments from the Fed Brainerd there. 353,000 shares to buy Bank of America. JP Morgan, 35,000 to buy. Morgan, Goldman, small buy imbalances as well. I'm looking at other standouts. They're pretty small. Twitter, we haven't talked about Twitter for a while. It is 42,000 to buy here this morning. Disney, 28,000 to sell. They are small, Joe. Procter & Gamble, 40,000 to sell. Procter & Gamble had a pretty good day yesterday. Huge resistance up there at 92. I thought I saw some institutional size up there, which is probably going to impact where that goes. That's about it. They're all pretty small here, nothing really standing out. One thing we didn't talk about today, though, is the Snap IPO.
I was going to bring it up.
Jump into that?
I was going to bring it up just now.
Okay. Tell us a little bit about what you've got background, Spencer, the IPO price. Give us some background here.
Yeah, so IPO expected to be at $17 per share. I know you guys were talking about taking bets on the pre-market show. A couple things to note about the IPO, and then if I could recap the S1 a little bit. So first of all, they did make more money. They did generate more revenue last year than they did the year before. So their revenue is increasing, but they're not yet profitable. They had a net loss in 2016 of $515 million. The year before it was 373. So they lost more money last year than in 2015. They said also in the S1 that they may never. It's not profitable, and they may never be profitable. Has
that ever been said by somebody, before they're doing an IPO, that we may never be profitable? What the hell? I don't know. I talked about this before, but I don't think there's no way that's ever been said. Who says that?
I don't know. The direct quote was, expect to incur operating losses in the future and may never achieve or maintain profitability. Some people were talking about, if you want to, trade Snapchat today, look at Google and Amazon. That's because Snapchat, they have to host their data somewhere, so they have to host it on the cloud. So they use the two biggest players in that space, are Amazon Web Services, and the Google Cloud. So they have committed. Snapchat has to paying. I think Google, it's
$2 billion over 5 years.
Yeah, Google is $2 billion over 5 years. Amazon is $1 billion over the next 5 years also, I think. So
Google and Amazon are going to make money off Snap, but Snap is not caring about making money themselves. Yeah. I can't invest in something that says that we may never achieve profitability and we don't really care, basically. I cannot invest in something like that. I know it's just numbers, and I know, fundamental and analysis really doesn't seem to mean much anymore in this market. And there's going to be a lot of people that are going to make a lot of money here on Snap. But bottom line is, this is not going to ever touch my invest portfolio until they retract that statement and say that we actually care about profitability. That is ridiculous. Joel, thoughts, concerns? Would you invest in a company that said we may never achieve profitability? Would you invest in that company?
No, and it just seems to me they're almost saying, in other words, is we want out. We want out at the top here, and disposing of some stock. I mean, you know how I am.
Why do an IPO? Exactly.
Yeah,
You're
why
making a
not
great
IPO?
point. Why do an IPO if you're not concerned about making money? I guess you're trying to raise money. I guess you're trying to raise money for your other. But I don't understand the point of being in business if you're not trying to make money,
I guess that.
especially for your public shareholders. It's not philanthropy here. You have public shareholders that are going to own this thing.
I think the big thing is with regards to Snapchat is we're waiting and seeing, kind of like Twitter and Facebook, is like, can they develop into more of what they are right now, right? Because right, and I mentioned this yesterday too on the show, is that a lot of their features are just being cannibalized right now by Instagram, which is owned by Facebook. So I think this all depends on whether or not they can expand, the company to do more than just, being a picture service, which is basically what it is right now, a picture and a text service. And that's all they do. And if they can be like Facebook, and they can, actually figure out other, grow the business into other areas, then they could be profitable potentially. But if they can't, then there will just be another Twitter. So.
I'm just trying to think about this, and I obviously haven't given this a lot of thought, so it's in the last minute. But maybe they're just thinking, okay, well, if we grow this business line, if we don't have cheap profitability, and maybe we'll get bought by somebody else because they like the platform and they like the users, and we get scooped up, and then that benefits shareholders. So maybe they're thinking like that with their whole train of thought, that eventually we get bought out and then shareholders can make some money. But I mean, as a public company, you're supposed to be in the best interest of your shareholders. So, and I just think when you're saying statements like, we don't care if we ever make money, I don't know if that's in the best interest of shareholders, but maybe they get bought out or something like that. Maybe it does work out. I mean, it doesn't matter. You can trade anything. So, don't, if you guys, are good at trading IPOs, don't get afraid, because the company may not make money ever. I mean, these things, we're in this market, that buy everything market, like I was saying yesterday. So let's do the bets and figure out, we were saying this on the pre-market show. Where do you think the stock is opening? What's the over-under? I think the stock opens 17 was the IPO price. I think it opens, I'm going to say $25. What's Spencer and what's Joel's? What's your bet?
That's awfully high.
Chat.
That's awfully high.
Chat, what do you think too? You think I'm high?
I was not going to go that high. I was going to say like $19, but
nah, I go over. It's going over 19.
All right. Wait, but the one thing I want to say real quick with regards to Amazon and Google is just remember now that there are entire companies, and we saw this. What day was it? Wednesday, where with the S3 server crash, right? There are entire companies that are entirely dependent on Amazon and Google for the use of their cloud, right? Like their company depends on Amazon and Google. So if anything, it's a reminder that Amazon and Google own our lives.
Joel, what's your price?
I was just gonna go with Ethan at $20. Nice round number there.
$20. Chat, give us your prices there. Type them in the chat. We'll see who's the closest there. But I'm saying that. So I think I'm saying 25. I think 20 is low.
Okay.
Joel's done with the Snapchat talk.
I know.
Joel, I think I learned that.
He's like, let's move on. Let's move on. We don't like Snapchat.
My very first day here, I brought up an IPO and I made Joel mad. So yeah, Joel hates IPOs. So
they don't have charts. Joel's your chartist. He's like, I have a chart to look at. Don't bring up something I don't even have a chart to look at yet. We'll talk it tomorrow.
All right.
Yeah, I can give you the all-time high, the all-time low, and the
Our technical analyst doesn't like talking about stocks that don't have charts. Go figure that one.
I don't know. One pony company. One product that I don't use. So you're asking me for my opinion on it.
Should we move on to Kroger? Let's move on to Kroger.
Yeah, let's move on. Let's go Kroger.
All right. Kroger reported Q4 EPS of 53 cents. That beat by a penny. Sales 27.6 versus 27.3 billion, so they beat there as well. They see their fiscal year EPS pretty much actually exactly in line with the estimate. And then they see Q1 EPS 55 to 59 cents. That may not compare to the 70-cent estimate. They see Q2 up slightly year over year, Q3 up strongly, and Q4 up in high single digits year over year. So
down 3% in the pre-market. Joel's he's gonna give you some levels on this one. I'm telling you. What do you see?
I even know what you're gonna say on this one. Okay.
What am I going to say? Tell me what I'm going to say.
You're going to say, yeah.
You know what I'm going to say before I know what I'm going to say. Tell me.
You're going to say the buy the dippers are going to come in this one.
No, you know what? I don't know. Because, that buy the dippers coming to everything. I mean, you're right 90% of the time when you say that.
30.70, that's your pre-market low. Getting a little bounce here. You've come hard off that nearly $35 high. Recent low of the move, we've been under $30. I don't know, 31. Excuse me. The recent low of the move has been 30.44. So Right there, your pre-market low 30.70. I think Dennis will be bottom fishing in the
Do you
30
think I'm getting in
handle.
there and going Krogering myself? I'm not. 1.5%. The dividend was never good enough at Kroger for me for a value stock. I like my value stocks at 3-4%. So I don't know. KR, I'm not interested. And I've said this before. I like KR that to get the deals you have to have a Kroger card. I don't like that when I go in there, and I have to have a Kroger card. If I don't have my Kroger card with me, I don't get the sale price. I don't like that.
All right, keeping an eye on that pre-market low 30.77. Your low on November 9th, 30.44. Just keep in mind here, some shorts may be anxious to cover this and bring it in. This stock hit nearly $35. This was back at the beginning of the year.
JD.com. This thing got a big pop, and now it's starting to actually get the drop here. JD not holding on to the gain. Still up 1.5% here, but this thing was way up. Spencer, give us the numbers, and Joel will tell you how high this thing got in the pre-market.
Q4, 18-cent per share loss versus 6-cent loss. Estimate revenue about 11.5 billion versus 11.15 billion.
Well, Joel, I saw this thing a lot higher than this. What was that pre-market high here?
33.40 is your pre-market high.
33.40.
33.40.
Fade trade's back. Maybe the fade trade's coming back.
Yeah, that's a little overdone there. Now profit takers are coming in here in this issue. Still trading up 71 cents at 31.45. So let's see. Let's see if we get back to that closing price, which was right near the low from yesterday. 3 lows right to the 30 quarter, 30.56 area. See if we fall back to that area.
Jumping over here to Burlington Coat Factory. I still call it Burlington. They call themselves Burlington Stores, but BURL is trading up almost 3% here in the pre-market. I'm assuming this said some good stuff.
Burlington Q4 EPS $1.78 versus $1.69. Sales 1.69 billion versus 1.66. So they beat on both those numbers. As far as Q1 goes, they see their Q1 EPS 67 cents versus 70 cents. I'm sorry, 67 cents to 70 cents, and 70 cents was the estimate. They see their fiscal year EPS at $3.77 to $3.87. That's pretty much in line or a little higher than the estimate. So they coming in with some higher than expected guidance by a little bit.
All the people who stop shopping at Target, I guess, shopped at Burlington Coat Factory, Joel.
Yeah, this is like the Domino's pizza of the retail industry. You know what I mean? It's just like, you think retail, you think some of the charts. I guess you can't get those kind of deals on Amazon. I'll just give you the pre-market high, 91.97. That coincides with your former all-time high. Still could be. We'll see what happens during the session. 91.67. We'll see. This is a runner here. Let's see if we can clear that pre-market high.
You want to know why I like Burlington Coat Factory?
It's
and I'll give
cheap.
you this specific example. What do you think I'm gonna say?
It's cheap.
Well, I like that too. So, that's why I like it for me. But I like it that I can bring my 2-year-old son there and bring him to the toy section, and he destroys the toy section, and it looks the same as it was when he got there. Because it's already destroyed. The toys are all over the floor at Burlington Coat Factory already. So I bring him to a nice store. He destroys the toy section. I have to clean up after him. I bring him to Burlington Coat Factory. The toys are already all destroyed, so I don't have to clean up after him. And he gets to play with all the toys. So that's why I like Burlington Coat Factory. The stores are a mess, but stuff's cheap in there.
You're going to have to bring Spencer over to the world headquarters here soon.
Yeah, I'll put that on the bucket list for Spencer.
All right, a lot of questions here about ICPT. Do we have some news on it?
There was a news item earlier this morning, and that was that NICE recommends Ocaliva for the treatment of patients with I'm not going to pronounce that, but they basically had a drug recommended for use.
Good enough. That's all we need. You're good at pronouncing these things,
NICE,
Spencer. I can't believe you didn't take
Okay, fine.
He's the best at it.
No, Brent's the best at
Yeah,
those
Brent's the
names.
best
Yeah,
at it.
Brent,
Okay.
you're right.
Primary biliary cholangitis is what I'm going to go with. Actually, that might be right.
What's the name of the drug?
The drug is Ocaliva, and it's this is the National Institute for Health and Care Excellence. So this is a major agency.
Spencer's good at pronouncing these things. Joel's terrible at it. I'm terrible at it too. But Joel, give us the numbers here.
133 right there, right now, where we're trading. That's the pre-market high. There's really only one number I can give you here in the short term. 135.25. That was your high on February 16th.
Abercrombie and Fitch getting a lift here in the pre-market. So this stock that's been out of favor, and we've been seeing this. It's again, the whole dogs trade or the laggards trade. Some of those stocks we've said have been showing some life, and some of the retailers that have actually done some disappointing earnings, not named Target, have actually rallied on disappointing earnings reports. So A&F here, what did they say?
This is a company I cannot believe is still in business. Q4 EPS 71 cents versus 75 cents. Sales 1.04 versus 1.05 billion. Same store sales for the quarter down 5%.
Nothing sounds great there, but it's not that bad, I guess. 220,000 shares traded. This goes to show you, I go right back to my algorithm, that guidance is more important than earnings. But basically, sentiment is usually more important than guidance. So how they're feeling about it, and everybody's just bearish this thing. So you get a crowded trade at the downside, you see a rally. So you're probably getting a little bit of a short squeeze. People who are betting that Abercrombie and Fitch, they can't report anything good. Well, too many people made that bet. So stock goes the other way.
I stopped going there when I was, I think, 17, and I don't know anyone. I guess it's a teeny bopper store.
Well,
right?
I mean, we could look this up, and I know I brought it up before. They didn't used to be a teeny bopper store. It used to be like a really, really cool store.
I know.
Where you could buy like globes and atlases and just a bunch of unique stuff, and then they switched to the teeny bopper stuff. I remember I used to love going there. But if you had your 17-year low filter out yesterday, you might have caught this one. You hit
17-year low.
Yeah, you hit 1091. This was back in January here. I'll bring up the monthly chart here, and boom, you go all the way back to the 2000s, Dennis, when this thing was under $11. Got the pop here. I don't know, a lot of people underwater in this one. It could run. I'll just keep an eye. Want to see immediate continuation through the pre-market high of 1264, coming back on the downside. A lot of people that sold yesterday might like to see that mark of 1169.
Jumping over to we could go to Noodles. I haven't done this one in a long time. Noodles NDLS. Did that report yet? It's on my list.
Yeah,
made a trade.
Yeah, they did. I love this restaurant. Q4 adjusted EPS 4-cent loss versus 6-cent loss. Estimate sales 129.4 versus 130.22 million. So they missed on the sales number by a little bit. They see their fiscal year adjusted net income at $1 to $2 million. Sales are lower than the estimate. 465 to 475 million. 490 was the estimate, so they missed that number. But I still love this restaurant.
$50 in 2014, now $3.90. So this chart is not pretty at all. Trend is definitely not your friend. That being said, we just got done telling you, these weak stocks, they report disappointing numbers, or sometimes do go the opposite way, and sometimes do get some short squeezes. Nothing goes straight to zero. I'm not saying Noodles is going to zero, but that's what the chart kind of looks like. But nothing goes straight there, and often you do see little pops, and sometimes some pretty good pops. And I don't know, they were buying Abercrombie and Fitch. Maybe they're going to start buying the dogs again today.
Not many people will be buying it. It's 243,111 shares traded yesterday.
None today on the report, not even a share.
I can't believe this. I think, Dennis, all the years we've been doing this, I think this is the first time we covered Noodles and Company. But double top at 4, 2, 3 lows right at the 380 level. So trade the range in this one in case it breaks out.
Broadcom's up $10. Let's go to one that is moving here. AVGO traded actively last night, trading very actively here in the pre-market, already 33,000 shares. But this $225 stock making new all-time highs again. Trend is your friend in this one. Back in 2013, this was $30. Now it's $225. Wow, that is a bullish chart, but breaking out again after consolidation period. I don't like chasing stocks. I mean, this looks like the definition of chasing, but already up 5% in the pre-market. Spencer, how are the numbers?
Q1 adjusted EPS $3.63 versus $3.46, so they beat that number. Sales $4.139 versus $1.08 billion. They beat that as well. Q2 adjusted sales, they see that at $4.1 billion about versus a $3.9 billion estimate. So they're looking good on that number too.
Pre-market
what do you think,
high.
Joel?
I mean, I'll just give you the pre-market high, 227, trading at 25.90. Only 34,000 shares have traded. So if you're looking for an upside target, or you took some of the lower price options at home, continued upside above 227 right now. That stands as resistance, all-time high. Former all-time high, 215.96, well above that.
He's making an interesting point on the air math on Apple. He says getting close to the pre-split 1,000 level. Remember, Apple did the 7-for-1 split. What's 140 times 7? Joel, do that in your head real fast.
14 times 7, 8 carry the 2, 980.
Hey, we're getting close. So what would be the actual price of 1,000? So go 1,000 divided by 7.
Yeah.
In your head. In your head.
What?
1,000 divided by 7 in your head right now.
What's
He's
150?
142.85 he's got.
I said 130.
That would be 1,000.
You know what? I just don't know how many people think about that. You know what I mean? I mean, you do a 7
No,
for
I
one.
know from a psych. Yeah, it's interesting though.
I would say 150. 140. You're half and whole numbers, but in this kind of I mean, how many people are gonna just take the time that we did to do the math to figure out where? I mean, if they had $1,000 price target on it, surely they know that. What's the highest price target on the street? Do we know? I know Gene in Piper Jaffray, he's not with Piper anymore, but I remember when we had the other analyst along with him, he was 150, 155. But trading up here in the pre-market.
Here, I see 185. Right. That was back in September though, and that was Drexel Hamilton. Here's one BTIG 165. That was from yesterday.
And this is they haven't even launched the new curved iPhone yet, and this is ahead of people buying ahead of the next iPhone.
I loved this stock in the 90s. This is one of the biggest positions in my investment portfolio. I still like this stock, but it has been running so far here now. It's getting lofty. I kind of feel like Warren Buffett. He's buying under 120. This thing just keeps going. It's up. That now everybody loves Apple up here. I mean, they hated it in the 90s. It's funny how this market works, and now they love it up here as it's breaking out over 140. I'm almost tempted to take some off the table, but I've stuck with Apple. I've had a long time in my investment portfolio. I've had it for years. But it starts to get to a point. I always analyze on valuation. There is some arguments to be made that they have a lot of cash, but my buddy Kappa was making the argument to me. They've been building up the debt too. And that was obviously because they say cheap money. Why not use cheap money? So they didn't need to build up the debt, but it is still an iPhone company. That's what my buddy Kappa was telling me. It is an iPhone company. It's basically kind of like a one-trick pony here, although that one trick is awesome. But I still think they're cooking some other stuff up, and cooking other stuff up. That's my attempt of lame humor there. Joel, what should I do?
What other
questions?
No. I mean, if you want to sell a little here. But I mean, what are you going to do? Where are you going to put the money? You going to put it under your mattress? Or are you going to reinvest
Good
it?
point.
You're going
to where am I going with that?
Yeah.
When I bought it, I had over 2% dividend. The dividend is now down to 1.63%. I mean, this company's a cash cow, so they continue. If they can milk this another 4 or 5 years, they'll have as much in the stock price, as they do. If they can just continue at this earnings, amount. So
sell 160 call or something like that.
Well, there's an option. There's something for you to consider too. And I used to do that a lot of times. I used to do the covered call rating against my investment portfolio, and I did that actually for years
until you got called away in your Walmart.
And my whole portfolio got called away from me. And then I'm like, man, I was selling that for $2, and I would have got $20. I would have just held on. But I don't know if we're in that type of raging bull market anymore here or not. Well, we feel like we are, but felt like a little bit of capitulation yesterday. I mean, that was a big move for Apple too, up over $2.50.
All right. Monster Beverage having a monster move here, trading up 563 at 47.64.
Well, they had earnings yesterday, right? Yeah, Q4 EPS 30 cents. That's in line. Sales 753.75 million versus 721 million. So they beat on that number nicely.
It's a big pop.
Yeah. Have you ever had a Monster Beverage?
No, too much caffeine for me.
I've never had a Monster or a
You don't want
Bull.
one. You don't want one.
No?
They're not good? They're not good, Spencer?
No, they're the kind of thing you drink in college when you have to pull an all-nighter.
Oh, okay.
Yeah. I already have enough. I don't even drink coffee. I have too much energy already, so I don't need to have Monster Beverage. I'll be talking so fast on the show if I was on a Monster Beverage, guys. You wouldn't understand anything I was talking about, even though I only understand half of it now.
All right. We are trading just off the highs of the pre-market session. That's at 47.95, trading at 47.57, so nice move up here. Above the pair of highs that you had at the 46.30 level. Man, oh man, I don't want to say clear sailing up to $50. But if you want to level above the pre-market high, go back to your October high of 48.86. Downward Dog is asking about VEEV. Vive. Dennis, you ever traded that one?
This was on Kramer last night. You know, he had a little bit of the Kramer effect. No, I have not. It must have had like earnings the day before, and this had the wildest candle you ever will see after consolidating, having a little 50 cent or a 70 cent range the day before whatever earnings report. Was it earnings yesterday? I'm assuming because of a 4 point range.
Yeah, it was earnings on Tuesday.
Okay, so this stock opened up at 43, tanks down to 41, then rallies. So you can see just a crazy candle to look at, trying to make heads or tails out of that. I don't know how to even read that candle because it's so expanded in both directions there. Joel will read that candle for you, though.
All right, I want to see 45.85. That was high. When did that 45.85? Just recently, right?
Last night.
Last night here. Now back at 44.90. Just a big bar here from yesterday. When you see this kind of, I mean, it's only ended up like $1.20, $1.30 on the day. When I see a huge range like that, to me, the closing price holds more important than the daily high or daily low. Yesterday's high, 45.85. So down, but right here, let's see if they hold 44.90. Yeah, if not, I just see a lot of downside in the issue. Big candle yesterday.
Can I bring up one? I got PBYI. This one is interesting. I haven't looked at its chart yet this morning. They did report.
What's going on there?
So they reported earnings yesterday. $1.22 EPS loss versus $1.92 estimate. But really, they also modify their summary of characteristics for one of their drugs. And now we have a tweet from Adam F. this morning, and this is really good insight, I think. He tweeted that hedge funds that own PBYI are screaming at sell-side analysts to defend the stock, per my sources. So, a lot of
bad news
of drama this morning in Puma Biotech.
Down 27%. This is one of your losers. Go to my loser board. Let's see if this is number one. It's right near the top. We have ADPT, which is just slightly beating. It's down 33% here today. So number two on the loser board, down 26.68% here right now. I don't know. Joel, give us some technicals here.
Throw it to me, Dennis. Thanks a lot. The pre-market low.
The technicals of the
you know what, too? That this move is taking, it looks like some institutions are just throwing this one up here. 26.50. That's your pre-market low. You did have some lows. Man, how far do you have to go back here? I guess I'll go back to 2016. I see a low at 1974. Don't think we'll see that today. Looking for continuation through the pre-market low of 26.50. If I had a big short in it, I would just be throwing stuff out at the half and whole numbers, bigger size, the lower I go. If I was trying along in this thing, I think I might wait another day or two here. I just think it's a question of, is this enough for the shorts to want to cover? And this stock has just been ugly here. You hit 279.37 in July of 2014 here. So if you're trying to go long, you're fighting a long-term downtrend.
We're just looking overall market thoughts here just for the open. Again, I'm saying financials are strong. That's the strongest sector that I'm looking at right now, as we've got Citigroup trading up over 0.5%, Goldman up over $1. Again, those comments from Brainerd is what's driving that. You're seeing weakness here in your other stocks, in your defensive stocks, your higher yielding stocks, because interest rates are indeed going up in March. Not good for your bonds, not good for your XLU, not good for some of your other defensive, like your REITs and stuff like that. But overall, we've got a pretty mixed market because you're flat. These opens are some of the toughest ones when the S&Ps are basically trading scratch.
From my perspective, the pre-market high, 94.25. All-time closing high from yesterday, 93.50. We hit 24.01 yesterday. Just to see if we want to build a little resistance up here at 2,400. Nice round number like that. Above 2,400, I'll be looking for 2,500 in the S&Ps.
Did we discuss any ratings today? I don't think we did.
No, we didn't.
There aren't a whole lot. Just running through the list right now. Ones that jump out to me: Credit Suisse upgraded ExxonMobil from underperformed to a neutral. Estee Lauder upgraded at Piper Jaffray to overweight. That's it as far as upgrades go. RBS upgraded from Berenberg. And then as far as downgrades, Apache, Kite Pharma, Anheuser-Busch caught a downgrade there from Bank of America. and Trip downgraded, Time Warner, but those are the ones that jumped out to me. Anything for you, Dennis? Or
No, that's the main ones. ExxonMobil, I just talked about that one for, the 30 seconds that we have left. A nice candle yesterday, Joel. ExxonMobil.
Yeah, I was looking at this one. Just starting to build support. Done a big fall off here from the 90s, and kind of interesting as as crude kind of went up and maintained it. 81. I mean, here we are up at 82.90. Looks like institutions are gathering near that area. Maybe we get a little weakness, or if you're looking for a swing trade here, 83 getting in here, just all those lows under 81, right around a nice round number. That could be your exit point. All right,
all
Spencer.
right, yep, we have another guest today at 9. Right now, actually, we're gonna take a quick break. We're gonna grab Nate Storch. He's the co-founder and CEO of Amenity Analytics. We're gonna talk about what they do, and yeah, so we'll be right back with Nate. Welcome back, traders and investors. This has been Zynga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin, and we're on the line now with Nate Storch. He's the co-founder and CEO of a company called Amenity Analytics. Mr. Storch, thank you so much for hopping on today.
It's a pleasure to be here, guys.
So, first off, Amenity Analytics, you're going to be at the Benzinga FinTech Awards in May. Tell us a little bit about what the company does. What do you guys do?
So at Amenity Analytics, our mission is to help you find signals that are trapped in text. So for financial investors, this usually consists of broker research, news, social media, earnings call transcripts, SEC filings, all of the information that you typically use to come up with your analysis for your fundamental work in regards to stocks. But what we allow you to do is really two things. The first is to create a platform using our natural language processing that helps you consume that information better. So I think everyone is challenged with information overload, just too many documents to read. So we help you come up with a system, or you can come up with a system on your own using our technology that can just help you consume that information systematically. And then once you've done that, you can actually use that work to find alpha in those sources. So put that together in certain combinations to actually give you trading alerts.
So right now, who are your customers? Are you mostly a B2B? Are you B2C? Are you working directly with the retail trader? Are you working mostly with technology, other platforms? Who are your customers?
So right now, we're applying this in two main areas. The first is institutional investors. So creating platforms to, like I said, consume information better and find alpha in those sources. And then, also for things like market research. So let's say you want to take 10,000 news articles on blockchain and find out who are all the players, what they're doing to each other, all the M&A events, all the financing, all the different technologies. And we let you do that in real time.
This is interesting.
So we're working with several large technology players as far as that goes.
I think it's interesting. I saw a tweet this morning from Kevin McPartland, who's been on the show before. He's a market structure guy. He's at Greenwich Associates. They did a study that said trading desks spend an average of $35 million annually on technology and people. And then with a service like yours, you're basically making a lot of that work easier, right? You're
Absolutely. So something like we can take 10 years of conference call transcripts on Walmart and break it down by topic. So for Walmart, it would be things like store traffic and promotional activity and weather, as well as the traditional things like pricing and discounting and all that good stuff. So anytime that Walmart said any of those things across that whole period of time, you can have right in front of you and simply click through, compare it to what other companies are saying, compare the current quarter to past quarters. So it gives you the ability to really get to the information you're looking for in no time.
So that, yeah, and then I guess going further along that line with a company like yours, I mean, theoretically, a trading desk could just cut half of their budget. If you do the work that takes, a human, 100 hours to do or 50 hours to do, then I mean that has some far-reaching implications, I think, for the whole industry.
Oh yeah, absolutely. And then remember, the next thing you can do is that once you have all of that information in such a structured format, you can then see when has it mattered in the past. You can essentially backtest all of that information that you have, all of that great sentiment info on a stock, reduce it into a score, and then find the correlation. See if that has mattered to stock price movement. And what we found is it does. There's a lot of predictive value in these various sources once you get them structured.
So you have a background as a trader. You have a background in trading and investing. You started on the buy side. So what led to you leaving that and starting Amenity Analytics?
Well, what I found was that I was simply being overwhelmed, and I just would end the week almost every week with a stack of information, a stack of documents a foot high on my desk, and there was no way I had the time to get back to it and read all of it. And most of the time I would end up just pushing it into the trash can or trying to farm it out to somebody else, one of the analysts to read it themselves. And the problem was I was missing important stuff. So as I look back, I noticed that the markets over the course of the 15-year period I spent, investing in the public markets had just gotten much harder. I think people were more systematic, they were smarter, they were faster. And I saw that for fundamental investors like myself, we just didn't have the tools that we needed to take advantage of opportunities. We were still using the same tools that we'd been using for decades. And so I thought there had to be a better way. So I found some really smart guys. I partnered with one of the world's leading experts in natural language processing and text analytics, and we started Amenity Analytics. It was about 1.5 years ago now.
Nate, I'm taking a look at your history here on Wall Street. You worked at some real big places here, starting out as an analyst at Morgan Stanley. Could you just, give us a couple of, your storied lessons that you learned along here that you kind of use as a rule of thumb when running Amenity Analytics? And if you have any kind of good trading or investing story that you'd like to share with us, we'd appreciate that too.
No, man.
PG.
Too many good stories from back in the day.
Okay. All right.
Let me think about that.
All right, but what just about tricks of the trade that you've learned along your progression through Wall Street and starting your own company?
Well, what I found was the most important thing was to develop a strong process and create your rules, create your fundamental beliefs, and then try and project that into your organization and institutionalize it. And so what I wanted to do with Amenity was create a platform that allowed investors to take their view of the world, take their their best ideas, and be able to replicate them. Create a system that takes what they think is important in conference call transcripts or what they're looking for in news articles, and be able to take a system that can really take their brain and replicate it. Because as an investor, the hardest thing, it's like the old Mike Tyson quote, is everybody has a plan until they get punched in the nose. And so the more systems and process that you can put into your investment approach, the better off you're going to be. When you do take those punches to the nose, you can maintain your discipline and continue to make smart decisions.
And Amenity Analytics won the Best in-Show Exhibitor Award at the 2016 Benzinga FinTech Awards. We have a whole exhibitor hall, and with a couple dozen exhibitors, and Amenity Analytics was voted by the attendees as being the best in show. So you definitely should check that out. AmenityAnalytics.com is the website. That's AMENITY analytics.com. Nate Sturridge, thanks so much for hopping on with us today. Thanks so much for telling us about your platform, and we will be in touch. Hope to see you at the 2017 Benzinga FinTech Awards.
Thanks, guys. I appreciate it.
All right. That is the show today, guys. Hope you enjoyed our interviews with Nate and Troy Noonan. Hope you enjoyed the chat and the just all talk and everything. And if you have a bet on where you think Snap will open up, we got about T-minus 20 minutes till that gets started. So another addition to the fun game of Wall Street. Hope you enjoyed the show. We'll be back with you folks tomorrow for the final show of the week. We've got Ephraim Hoffman. He's running Alpha Capital Markets. It's his company. And then at 8:35, we're going to be joined by Rod Casilli. We had him on last week. He's from Collective 2. He was on the day we had massive internet outages in the building. So we're going to get Rod back on tomorrow. That's it for the day. Have a good rest of your day, everybody. We'll be back with you on Friday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.